Joining us this morning is Marko Papic, macro and geopolitical expert at BCA Research. Marko, thanks so much for joining us. As always, pleasure speaking with you. I remember the last time we spoke was also about trade, and the day after the calculations were made, and you said, I can't remember which, was it 8th grade math or 6th grade math? And since then, it's been rolled back. So I just want to get your sense of what is occurring right now. Seemingly, they're trying to hasten these deals through before they face legal battles at home. Are you reading it the same way and you're looking through them?
Well, to be fair to the administration, it was neither 6th nor 8th grade math. We now know it was AI. So well done. At least there was that. First of all, always a pleasure to be speaking with you. And yes, I think it's pretty clear that, Secretary Lutnick's comments were quite positive. He's saying, like, look, we're going to find a middle ground somewhere. We're going to make exceptions for things that matter to India. We want them to do the same for us. I think this is very, very important because this is completely different from Lutnick's comments days after April 2nd, the Liberation Day. He was quite firm. He was in this is not a negotiation camp, which was the aggressive camp. And he has now, of course, aligned himself with the trajectory of the trade war, which is that President Trump is doing what he's always doing. He's making deals. And he is ultimately going to produce many of these quote-unquote trade deals. Now, President Trump's detractors would argue that these are not trade deals, right? They're not comprehensive. They're going to be more like a collection of memorandums of understanding. But I think that we have to also be fair to the administration. I think they will be marginally positive for all sides that take part in this.
Marko, good morning. Hiral on the side. So, interesting point coming in there. Now you're talking about a shorter time frame where, a deal could be struck. Would it be right to say that any uncertainty with regards to the trade deal now is absolutely priced in?
Oh, that's a really good question. I would say that. I mean, we just had a May. We've never had a May like this since 1990 in terms of performance in May. And by the way, May tends to be seasonally a very iffy month, right? There's that old adage, sell in May and go away for the summer. And so I think that if you look at the performance of equities over the last 30 days, I mean, you can't get better than that. So yes, I do think that there could be some negative surprises over the next 2 months. I think that's appropriate to think. But President Trump and his team, they've already pivoted so many times on so many different points in these negotiations. I think it's pretty clear to everyone that they do intend to conclude deals. And I think that's very positive.
Marko, what does the underlying impact of higher yields, both in US as well as in Japan, for example, mean for flows into emerging markets? The overarching belief was that the dollar will weaken, flows will move out of DMs, particularly the US out here. But suddenly there are murmurs of a yen carry trade reversal happening as well. So I'm just trying to understand from a flows perspective, because that's a part of macro, right? How do you think about it?
Yeah, for sure. So first of all, I think the dollar losing its value is going to continue. The US has a very, very large current account deficit. President Trump has basically said to the rest of the world, I want it to narrow. As you heard Lutnick earlier in your recording, he's not saying we want it to be in surplus. We just want these trade balances to correct. I think they're going to be successful, but not because they imposed tariffs, but instead because they allowed the currency to depreciate, which will make imports more expensive. Furthermore, fiscal policy in the US is becoming less profligate. That means they're becoming more prudent. Even the bill that's snaking its way through Congress actually doesn't add that much to the deficit, which is already high. And bond yields are acting as a constraint on further fiscal stimulus in the US. All of this is leading me to think that as current account deficit narrows due to more prudent fiscal policy and due to a cheaper currency, there will be massive outflows out of the US because current account deficit is reflected by a capital account surplus. Now, this is a little bit of macroeconomics 101, very early there in India, so I'm sure your viewers didn't really appreciate that at 8 o'clock in the morning. However, I think that it's really important to understand that these flows have to leave the US if the Trump administration is going to be successful. That's kind of the irony of the Trump administration. They are trying to reduce their trade imbalance, but that inevitably will lead to some repatriation of capital to other markets. I don't think that yen carry trade can overwhelm the move away from the US. And so I continue to be very bullish on Europe and emerging markets, broadly speaking. I don't think the high levels of yields are going to prevent capital from going to emerging markets.
Right, so capital into emerging markets, that's going to be the key, and that's where all the bets are on as well. But thank you, Marko, so much for joining us on the show and speaking to us at NDTV Profit.